You as investors are able to own part of a solar facility, and that is what we give out as dividends to our shareholders. You'll see an exponential increase in revenue. We're giving out everything in dividends. The REIT law requires 90% dividend payout. CREIT actually gives more than 90%.
Hi everyone, I am Aaron Le and you are listening to Dragonfly's The Dividend Investor, the podcast of the most profitable hour of the day. So this is the podcast where we help you build the dream life that you want, one dividend payout at a time. And so in each episode, we are going to break down stories, strategies, and habits that will help you build a lifetime of passive income. So whether nagsisimula ka pa lang or you are already a seasoned investor, this podcast will surely help you. Okay, so for today's guest, we have no other than Miss Joan Cosico. So she's the Chief Investors Relations Officer of Citicore Energy REIT and Citicore Renewable Energy Corporation. So Miss Joan, welcome to the Dividend Investor Podcast.
Hi, everyone. I'd like to give a shout out to all the Dragonfly clients that are taking the time to learn about the beauty of having a dividend receiving life. So hopefully you'll get to know more about CREIT in the process and make that investment decision for yourselves.
Nice message to our audience, right? Miss Joan, for our audience out there, baka curious kasi sila, what does a Chief Investor Relations Officer do or an IR for that matter?
All right. So it's a good question. No? For those of you wondering, an investor relation officer is similar to being the liaison or the bridge between an investor and the publicly listed company. So what we share with you are the company's past performance, whether it's quarterly or an annual basis as a listed company, and as well as our plans moving forward, no, or the strategy in relation to where we are right now. So it's an important role, not just because it's my job, but it is an important bridge for you to understand where the company is, what we're doing, and where we're headed. So as an investor, you get firsthand information that's not fake news or that's not misleading because we also follow regulatory disclosure requirements. No? So I think that's the discipline in sharing information, verified information for that matter. So at least you as investors are well guided and are able to make a very sound decision whether you want to invest in a company or put more in an already invested company.
I agree with what you said, Miss Joan. I myself, I don't like to be kept in the dark as an investor. So it's really nice or important for me that I know that the company is executing their plans right to what they said they're going to do, right?
Right. But it's not a perfect world, right? Sometimes your business environment or your competitive landscape changes, and that's all right. The company that you're invested in or the company you're looking at should be able to also communicate why they're falling short of whatever they plan to do and how they're rectifying it. So it's a real communication line that allows investors to understand where the company's at. So it's not perfect. Not everything is perfect, of course. It's an ever-changing world, as they say. But I think what would be very good is to have or to rely on your investor relations officer to let you know how the company has adjusted their strategy or has found a new business venture, for example.
Right. So para communication and how they pivot and adapt, it's really important as well. Okay, Miss Joel, for our audience listening out there, sometimes kasi they're investors, right? And maybe they want to pursue into this industry as well. They want to be an IR in the future, investor relations officer. What skill set or career experience should they prepare kaya?
Actually, good question. I think for those of you that are thinking of pursuing investor relations, I think number one, you have to understand financial statements. You don't have to be a CFA or a CPA. There has to be some very strong foundation about understanding the income statement, the balance sheet, what it means, a general appreciation of management and as well as strategy. Also important would be very good communication skills, whether it's oral or written, both are required because obviously communication is all about being consistent, being clear, and being concise because people don't have time of day, right? So being able to express your message succinctly is key as well. And of course, passion. You have to love what you're doing in any job, I guess.
Okay, Miss Joan, at such a young age, you've achieved so much and such a feat already, right? And I did my homework and I noticed that you did 15 years at Robinson's Land before. And then at around 2016, you moved to Megawide and to work with Mr. Edgar Saavedra, right? Okay, so you've been working with Mr. Edgar Saavedra for quite some time already, close to a decade. So how is it like working with him and how is Mr. Edgar Saavedra as a leader?
So thank you for calling me young, but if you add the years, 15 plus 10, maybe not so young. But yes, I joined the Megawide group almost 10 years ago, and I'm very fortunate to be under the leadership of Mr. Edgar Saavedra. He's our chairman for both Megawide and the Citicore group. No? So under his leadership, we have three listed companies, Megawide, CREIT, and CREC. And I just have to say that Boss Ed is really a dynamic leader. To me, he's not just an entrepreneur that has a great idea. I think his vision related to his entrepreneurial spirit is anchored on giving back to the country. If you'll notice our vision statement for Megawide, it's engineering a first world Philippines, whether it's through an airport, a land port, or real estate development. There's that first world aspect. In our power company, our vision is powering a first world Philippines with pure renewable energy. So I think it's very clear what he wants. And I think he's probably comparing where I came from. Most of the bigger conglomerates in the country are essentially second or third generation already. Mr. Saavedra is a first generation Taipan. No? So and he's very young. So that's why I'd like to think our agility as a company stems from his youthful exuberance, but at the same time, his passion for innovation and excellence. No? So I think those are the key unique attributes of Boss Ed as a leader. Plus, he's a builder. He's a civil engineer by profession. So he's not just sitting in the office. He's on site. He's, when we're, whether it's vertical building, an airport, a land port, or a solar farm, as in he'll stand there in the ground and
Very hands on.
very hands on. He'll roll up his sleeves and he'll be hands on. And I think that's a very fortunate leadership style to admire and emulate as well.
Ms. Joan, you've mentioned about being a pure renewable energy play. So what does it mean? Does it mean that 100% it's into the renewable space, like no traditional energy aspect? Na?
Yes, that's your vision to have solar, hydro, and wind platforms that are using or harnessing Earth's energy, to be able to convert it into power that we can use to, I guess, to power the country's growth as well.
Okay, Ms. Joan, my next question is, how did your 15 years of experience at RLC prepare you for your role today at Citicore Group?
Of course, I owe most of my tenacity as well as my diligence, having worked with actually Mr. Lance, no less. No? So I think when they raffled off bosses, I got the lucky end. So my first 4 years in the JG Summit Group or the Gokongwei Group was under Mr. Lance himself. So it was like first row seats to strategy and being able to see how seemingly a mature industry, for example, fast-moving consumer goods, they're really big. No, their Jack and Jill brand is recognizable. Robinson's Land is the second largest property developer in the country. How do you grow from that? Is what I saw under his leadership, and of course, 9 out of my 15 years was spent with Frederick Go, who was our president then for Robinson's Land. And I think when I first came in Robinson's Land, we only had about 15, 16 malls. When I left, we had 32. So quite blessing to be able to witness and be part of the company's growth, no? Coming off a bigger base. Comparing it, for example, the Megawide Citicore Group, again, first generation. So the growth trajectory is quite ambitious, but then we also have to be cognizant that we don't have inheritance money coming in, right? So a lot of the things that we have are through, of course, our shareholders as well as the capital markets, which is why the role of an investor relations person is important because the capital market is a source of growth for young entrepreneurs that have a big idea and need the funding to support.
Exactly. And there's a way for exit, right? I mean, to for these young entrepreneurs to grow their companies. Hopefully, one day they could easily exit out of their companies by the way of an IPO, right? Someday.
Yes, yes. And that, in fact, is what happened in Megawide, right? Megawide has been in existence for 28 years, but it was in 1997, no? But it was until 2011 that did a capital market exercise for an IPO, and they built a state of the art precast facility for coming off that IPO, which enabled them to change the landscape of how things are built. No, so having a precast facility decreases your building time, it controls your cost, and it's a first world technology, right?
Okay, to preface the next parts of the discussion, from the name of CREIT, there's REIT in there, right? So for our audience, what does a REIT actually mean? Or ano nga ba yung REIT?
A REIT is well defined as real estate investment trust. So imagine an investor can invest directly in land, for example, right? But that takes a huge amount of capital, right? So a REIT, it's a unit trust. So you can buy shares of a REIT, and you are a part owner of a land, right? So you have the luxury of choice whether to invest in commercial REITs, which most of the REITs today have commercial assets like office buildings, shopping centers, and the like. Citicore Energy REIT is one of the first and largest renewable energy REIT that listed in 2022. No? So a lot of people scratched their heads and said, what's an energy REIT? So basically, you as investors are able to own part of a solar facility that is leased out to a solar operator that generates and operates the plant. No? And then in turn, they pay the REIT a lease income for the use of said real estate asset. And that is what we give out as dividends to our shareholders.
So from what I understand from what you said, Miss Joan, it's like I'm being a landlord at a fraction of a cost, as at a fraction of ownership as well. So instead of like shelling out, let's say, millions of pesos, I just need to shell out 1,000, 2,000 pesos. And then I become a part owner of like a very big company and building as well. Or in this case, because of CREIT, it's mostly for solar facilities.
Correct, correct. So simply pointed out that you are a shareholder, nonetheless, regardless whether you own 1,000 shares or 10,000 shares, and you take part in the company's profits because we pay out dividends whether you own 1,000 shares or 10,000 shares.
Right. So that way, I'm being paid like how Mr. Edgar Saavedra is being paid as well as in the form of dividends, correct?
Correct, correct.
Miss Joan, I agree that with what you said earlier about how energy REIT, I mean, that's a first right here in the Philippines. So what's the hardest part about it when you guys launched IPO'd this? And it's so different because it's something so novel. Eh? So what's the hardest part about this?
Yes, it was very hard because it was something new, no? So we did a lot of investor campaigns or investor education, sort of informing how it actually operates the same way. We're still getting lease income, but your underlying assets would be renewable assets, right? In this case, CREIT owns land parcels as well as solar plants that are being used or being operated to generate solar power, and whatever payment or rental income is generated and is shared with all of our investors. So a lot of people didn't really understand parang how can you read a solar asset, no? And I think what worked for us is that we were able to laymanize it. It's the same as a shopping center. There's a tenant who's renting from you, and then it just so happens that the REIT would have just one tenant instead of like a mall having maybe 100 or so tenants, no? With different sizes. No, you can have department store, supermarket, or a kiosk. So different types of tenants. Whereas for Citicore Energy REIT, there's just one tenant and one landlord.
Okay. Speaking of that, Miss Joan, like what do you say are the strengths and weaknesses, or maybe the risk and opportunity of having just one tenant versus like the others because they have multiple tenants, right?
Right. So it has both its pros and cons, right? Having multiple tenants would obviously have varying start dates and end dates of the contract, right? You would also have varying occupancy rates depending on where we are in the economic cycle. We've seen how some of the REITs were hurt with the exodus of OGOs or during COVID, wherein people shifted to a work from home setup. So a lot of the office spaces became vacant. Nonetheless, even the malls got affected with COVID, no, in terms of foot traffic and subsequently rental as well. For Citicore Energy REIT, because there is only one tenant, the entire land or square meterage is leased out from the start of the contract until the end of the contract, which is all of 25 years. So, as a REIT shareholder, you are more or less guaranteed that, I mean, there's consistency in the tenant being able to pay. Now, the question is how sustainable is the revenue generation of the tenant? If we look at our business model, the tenant is engaged in power manufacturing, right, or power generation. Whether we consume the power in our offices, in the malls, or at home, this is a basic commodity. It's a basic need. So when we switch on our computers, whether wherever we are, that's power that needs to be generated. So I think in terms of predictability or resiliency, I think Citicore Energy REIT has that advantage because you don't get to ride out any economic cycles that may be more visible or more sensitive for shopping centers or offices.
I like what you said, Miss Joan, about how it's very predictable and consistent. So as an investor, kasi you'd want to see that number one, the business model is very stable and consistent as well. Like you said, I mean, who doesn't use electricity, right, in this world, right? So, okay, Miss Joan, moving on to CREIT's business model. Can you walk us through how CREIT generates its income or generates its earnings?
As mentioned, as of today, CREIT has 14 assets. Because we generate rental income, we look at our total leasable area. So our total leasable area right now is 7 million square meters. No, when we IPO'd in 2022, that was just about 1.6 million square meters. So immediately after the IPO, we acquired some properties coming off the proceeds from the IPO, and subsequently we've acquired additional about 5 million square meters in 2023 as part of our asset expansion program. No? So that allows us to increase our revenue stream a REIT kasi grows when you expand your properties, no, that are under the REIT. So you acquire assets that generate income, rental income, and as you keep on acquiring, of course, the revenue base also expands.
Right.
And maybe just to also mention on the another uniqueness of the CREIT business model. So I mentioned earlier that we have 14 assets and basically these are locked in for the next 20 or so years. No? So your rental revenue stream is quite predictable, no? Month in, month out, year after year for the next 20 years. We also have this variable lease component. What does that mean? So some of our assets in the REIT have operating solar assets, right? So the tenant shares with the REIT, any incremental revenue. Say they're going to renew their power contract with company A or customer B. If, for example, they increase their rate from 1 peso to 2 pesos, the difference, we take 50, the tenant shares with the REIT, the difference, right? So that is what we call a variable lease income, which we distribute every year end. So apart from having a guaranteed base lease, this is the one that's predictable about for the next 20 years. You also have a chance, the CREIT investors also have a chance to partake with that little bump up coming from that variable lease component.
Okay, so the investors could think of it in a way that they get the stability of investing in real estate, but at the same time, they get the growth because of these variable lease component that you mentioned.
Correct.
Actually, my next question is quite related. My next question, I wanted to ask you, Sana, on how is renting out these solar facilities better compared to these traditional REITs that rent out office spaces or malls for that matter?
Again, so we'll go back to basics, right? The mall, sometimes in an economic tightness, people will visit malls less frequently, maybe. Maybe they'll have a change in behavior. They'll shift to online shopping, which obviously can't be captured as a lease income in a physical brick and mortar mall. Offices, for example, also have evolved. There's more propensity for work from home. So maybe some of the offices have downsized their physical office space requirement as people come in. And there's also this trend of having a hot desk policy, meaning there's no specific work area for an employee. They just take whatever desk is available when they come into the office. So that means the leasable space actually decreases over time. For Citicore, again, we need power. I mean, even on a cloudy day like this today, we're still generating power, no? Although obviously not at the peak because the sun is not there to bear it down on us. But in general, the Philippines is one of the high irradiation locations in the Southeast Asian region. So we can benefit from using the sun's strength and transforming this into solar power.
I'm curious now, Miss Joan. You mentioned about how sometimes when the weather isn't cooperating with us, it might affect the performance, right? Would it be better for the solar facilities if if the temperature is hotter? For example, the sun's radiating a hotter temperature, or doesn't matter?
It of course the brightness of the sun is better always, no. But even then, I think the ability to generate power evens out. I mean, the solar energy kasi is peaking in certain hours of the day. So like, for example, 6 to say 8 o'clock a.m. The sun is not as strong, right? But you have 10 o'clock to 1 o'clock p.m. wherein I mean we feel the intensity of the sun rays bearing down on us. So that's the peak generation capacity of the plant.
Going back to what you said earlier, Ms. Joan, how renting out these solar facilities is better than traditional REITs. You mentioned about if people were to cut out an expense, they would first cut out yung parang wants, di ba, or less important things, which could affect these malls or office spaces. So parang electricity is one of the things that they would cut out last, right?
It's very hard to cut out electricity. I mean, I think we're used to being online. We're used to being able to live in the comforts of an air conditioned or a fan cooled environment. So imagine a world wherein you're sitting in your house when there's no power, so you have to use a physical fan, and even cooking, or even not having a refrigerator to store your cold drink, right? So I think there's an essential factor in electricity. And I think the key is while we can get or we are getting our electricity coming from imported fuel sources, we're dependent on imported fuel. I think as a country, it's also necessary for us to shift into something that's more sustainable because, I mean, we saw this happen during the pandemic wherein even if you have all the money in the world, the coal suppliers don't want to sell coal to you, right? I mean, what are you going to do? Or the Middle East oil lords don't want to sell oil and gas to you. I mean, we'll be physically debilitated, right? There has to be that national movement. And I think the government is on the right track. The Department of Energy is actually pushing for a 50% supply coming from renewable energy sources. No? And the target is by 2040. Right now, we're about 22%. So we're inching closer. And I think having a multi platform, like solar is the fastest to execute. Obviously, you just need land, you need connection to the grid, and you can build a solar plant in 18 to 24 months, no? Because we're builders, right? Boss Ed is a builder. So we've innovated also the way we build. But having said that, so we can't really rely on solar in itself, right? You have to augment it with battery energy storage systems so that you can extend you can store power and then provide power to the grid even on a night basis, right? There's hydro or doing run of river. So this basically uses the natural flow of the water and powers a wheel that generates electricity. And then we're also going into onshore wind. No? So this one naman, these are mountain top ranges that take the natural wind energy and converting it into usable power. So I think having diversity in your technology platform also bodes very well in days wherein, for example, you don't have much irradiance, you can still rely on other forms of power. But the general vision is to have the Philippines being powered by renewable energy sources, at least half of the supply coming.
Among all these options for these renewable energy, which among them do you think is pinaka-efficient or parang pinaka-realistic to do as well?
Realistic would any of the it has varying capex requirements. So I mean, in terms of cost, no, so there are different costs as well as different time to build as well. So as a developer, Citicore Renewable Energy Corporation will have to have sort of a plan whether how to mix solar with wind or how to mix wind with solar and which ones will be powered with battery or be augmented with battery. Ganyan. So it's not parang I don't think there's one technology better than the other. I think what we aspire to do as a developer and operator is that we try to have a technology balance that will allow us to produce energy similar to a base load capacity. Meaning, kunyari, coal is able to provide full 24 hours power, right? Because of its intermittency. Parang syempre daytime lang yung peak ng power niya. So if you augment this with battery, you can actually extend the generation and the distribution of the power into the grid maybe until 10 p.m. at night, right? So it really varies. There's no one main solution.
Actually, these batteries before, they were quite expensive, right? So do you see them going down further in cost? Like, do you see them getting cheaper and cheaper over time?
If we just look at 10 years past, no, or built plants as early as 10 years ago, cost of building a plant has significantly dropped. I think even the battery prices will eventually get better. And then subsequently, because a lot of people are also having a requirement for battery energy storage system, then obviously that can bring down the cost as well. So it provides commercial viability.
Okay, Miss Joan, my next question is right now, these solar facilities or land is being leased out, right? What about the solar panels themselves? Are they being leased out as well?
No, not yet, because some of the plants are not yet still operational. Having said that, I think one of the key attributes of CREIT is that the REIT can acquire land. So you've seen that we've done an acquisition in 2023, about 5 million square meters, and using the 1 megawatt to 1 hectare requirement. So that tantamounts to about 500 megawatts of what CREC, the sponsor, is currently building, right? So for all intents and purposes, CREIT can acquire the rest of the 5 million square meters that CREC is building on, right? Because CREC is doing a 1 gigawatt each year, right? CREIT can also acquire the land plus the solar asset once they're energized. Because obviously, parang you can't acquire something that is not yet energized, maybe because your rental stream would not be maximized.
Not it being energized, meaning it's not being used
It's
yet.
not yet powered. It's not yet switched on. It's not yet producing power, right? So your rental would be expensive compared to the tenant's revenue generation.
So basically, it's not bringing revenue back, but then you're
Already
already
incurring.
incurring costs.
Yes.
Miss Joan, you mentioned about not yet, right? So meaning to say in the future, is that in the pipeline?
Yes, we've always been straightforward in all of our IR communications that the REIT or Citicore Energy REIT has the potential of cherry picking, looking at what CREC assets are, solar assets, and acquiring these. No, so I think that's one of the key differences again, or the uniqueness of CREIT is that CREIT has full visibility on its sponsor's expansion plan. meaning Citicore Renewable Energy or CREC is doing 1 gigawatt each year for the next 5 years. And as CREIT, then I can see, oh, okay, so I have the potential to acquire assets equivalent to 1 gigawatt each year, right? Or portion thereof. So it's having that visibility of a potential growth path that I think allows CREIT to experience a good track record so far, since its IPO.
Okay, Ms. Joan, if ever you are to do that in the future, like to rent out these assets themselves, like don't you think that it possesses some risk as well? Because these are equipments, right? And they're prone to wear and tear or sometimes damages. So is there a risk to that?
There's always a risk of wear and tear, or in the solar panel equivalent, there's degradation, no, years. But that risk stays with the developer operator, right? Because they're the ones utilizing the equipment. So maybe it's something like you're renting a car. So basically, the one who is operating that rental car business is going to be responsible for example, if they bump the car, right? So the user or the operator of that vehicle will have to be responsible for that repair.
Okay, that's a very nice analogy, meaning to say, since they're the ones who bumped the car, I mean, they have to fix the car first before they can return it to you or
Correct,
for you to
because
use it.
otherwise I won't be able to lease it out properly.
Yes. Okay, Ms. Jones, speaking of timeline, are you acquiring solar assets now or maybe when in the future to lease out more to CREC?
Very, very good question and quite timely. We are in the process of studying which assets we can acquire. Having said that, of course, we have to look at the CREIT financials. No, you know that we're giving out everything in dividends. The REIT law requires 90% dividend payout. No, we as a company, CREIT actually gives more than 90% because depreciation we give back because it's a non-cash expense, no, so we add it back and that we give to all of our investors. So having said that, there is no money left in the CREIT wallet to be able to acquire property. So just like any other REITs in the market, you can look at raising funds through bonds, which we did in 2023. We did our first ASEAN Green Bond. No, we raised about 4.5 billion pesos, which led to the acquisition of 5 million square meters. We could do the same moving forward. Another way to acquire land would be the other REITs have been doing an asset for share swap. So it's something that we're also studying, whether it's an efficient way to acquire assets. No? And of course, another way would be to do a follow-on offering, right? You go back to the capital market and offer more shares because you need the money to buy more assets. I think in any of those three capital raising exercise, I think one thing is very clear for us in CREIT. We'd like to be able to ensure that any asset acquisition yields incremental rental revenue, right? So that it is value accretive to an investor. What does value accretive mean? It means that you guys are not going to pay for any acquisition, meaning you are basically going to reap the additional rental coming from these acquisitions.
Yeah, actually, my next question is related, Miss Joan. So let's dive deeper into these assets or property for share swap, right? Because normally what happens is, as you mentioned, like for example, here, the parent company or CREC hands out these assets to CREIT. In exchange, CREIT gives more shares back to CREC or the parent company. Normally, you would think that CREIT would make more money because they got these assets, right? But on the other hand, they're giving out more shares to CREC. So that means that the revenue or the income they generate has to be spread out to more investors now. What you're saying is that it's value accretive or dividend accretive. Does it mean that once the assets goes to CREIT, obviously the rental revenue increases over time, right? It's still going to be positive for these investors.
It will still be positive because you're expanding your asset base, right? Whether your payment instrument is actual cash or you used shares to purchase the asset. No, at the end of the day, the asset is a revenue generating asset. So now that you are an owner of that asset, then you are entitled to any lease income from a tenant that will use that asset. So whether there's a cost to the bond that you've already issued so that you're able to acquire those assets, then you take out all the costs relating to that money raising, the fundraising activity, and then whatever income you're left with, then that's what you dividend out.
My next question, Miss Joan, is for example, speaking of these property for share swaps, right? When can investors expect it to relate to like higher dividend payout or higher income for the company?
I think as much as possible, any REIT would like to have instant impact. No, for you to feel that impact as an investor means obviously the full impact, for example, would be on a full quarter revenue. Say you acquired an asset at the start of the one quarter, and then as you pay your quarterly dividends, then you'll notice that there's a bump up on the lease revenues, and of course it trickles down. Then the dividends would also increase according to the asset that has been acquired.
Okay, Miss Joan, you mentioned earlier that you're targeting for 5 gigawatts, right? For our audience out there, how big is 5 gigawatts? Like, what could it power kaya?
I think 100 megawatts will be able to supply about 700 households. So, if my math is correct, 700 times 1,000, that's a lot of households. No? Actually, the solar power that we generate actually powers your favorite malls. So, it's that magnitude.
What's the current status on that? Like, from the 5 gigawatt target, like, where are we currently at?
So we're actually energizing the plants, CREC solar plants, starting this month and subsequently until December. By year end, we probably would have about 800 megawatts. An additional, the balance of the 1 gigawatt in sometime in January that suffered a little bit of delay again. We had to explain that it's not a perfect world, but rest assured that the 1 gigawatt is indeed forthcoming. No? So once these solar plants are switched on, obviously for CREC investors, you'll see an exponential increase in revenue, electricity sales revenue, obviously because the capacity will actually grow from 287 megawatts currently to about 1,100 no, by year end. So that's a big swing. For CREC investors, you'll see that effect next year, no, the full effect in 2026. What does it mean for CREIT investors? It means that we are able to acquire additional assets for CREIT.
Miss Joan, speaking of the 5 gigawatt target, like what could investors out there expect next? For example, you've achieved the 5 gigawatt target already. So what could be next after that one for growth?
There's obviously a lot more that we can do. Syempre, it doesn't mean that when we achieve 5 gigawatts, parang we're not going to do anything na, diba? So I think what we've communicated, at least to our investors, is that we have a 5-year roadmap that will change the company's earning potential basically 5 times, right? From where we are right more than 5 times actually, because it will increase our capacity. Having said that, it would allow us to venture out into new markets. For example, know that Citicore CREC had a recent strategic investor, the Indonesian sovereign wealth fund, Danantara, through the Pertamina group, invested 20% in the company. So that could mean opportunities taking the solar business in Indonesia as well.
So international expansion potentially.
I think it's a wide world of opportunities. But to us, we are focused on delivering the first 5 gigawatts in the next 5 years, starting this year, so that we have, I guess, the financial strength also to venture out into other opportunities.
For the upcoming acquisitions, Miss Joan, will these be in the existing provinces or outside of the existing provinces?
We're just finalizing the details. Some of the land that we purchased in 2023 are in Pampanga, Pangasinan, and Batangas, no, largely. We can look at those provinces as well, or we're also building in some other provinces, but more or less around the same area.
Okay, Ms. Joan, moving now on to dividends, right? Is there a reason why CREIT could pay out a very high payout rate of dividends? Is it because of its very high WALE or weighted average lease expiry, meaning to say that the contracts that or the tenants are here for the long term? You rent it out to these tenants for the long term talaga.
Yes, and I think it sort of trickles down to the business fundamental of Citicore Energy REIT, right? The tenant is locked in for the next 20 years. 20 years na lang kasi walk through na some of the lease contracts. No? So 20 years moving forward, you already know that the same tenant will be operating the solar plant and then they will be able to pay rental. So that provides you that stability. So there are no surprises, right? Unlike, for example, again, God forbid, another virus comes or there's going to be a bigger shift to work from home, then you'll have a lot more vacancies, for example, in malls or offices, right? So that kind of dims your rental revenues if your assets are shopping centers and malls. Again, for C-REIT, because the whole parcel of land or the whole plant is being operated. On a cloudy day, the tenant can't say, sorry, I'm just, not going to operate 10 hectares out of the 100 hectares, right? So it's a full-time operation for the next 20 years. So at any given time, it's 100% occupancy. It's almost predictable, very predictable, right?
So from what you said, Ms. Joan, can we always expect 100% occupancy rate from CREIT?
I think so because there won't be any instance wherein a solar operator will say, oh, I'm just going to use 90 hectares of the 100 hectares right now. That means they are also not producing what they are contracted to produce, right? So if, say, their contract, for example, requires them to sell 100 megawatts, they can't say, okay, I'll just, give 90 megawatts for this month, right? So I think there's a sense of steadiness to it. Parang, actually, boring na siya eh, di ba? Parang you'll just see ganyan yung rental income and it just blips up if you acquire assets, right? So, pero steady is
Yeah,
not
investors
bad,
pay a
right?
premium for that
Yeah.
steadiness, right?
Yeah.
So, Ms. June here, REITs usually typically tend to pay out at least 90%, right, from the law. But I noticed that CREIT way back in the past, if I'm not mistaken, around 2022, 2023, paid out a little bit more than 100%. So, is there a reasoning to this, and how did CREIT do this actually before?
So a lot of the REITs will pay out what we call funds from operations, no? So meaning take out all the costs in running a REIT and then you just have funds from operations. So this is usually almost equivalent to dividendable income, no? What we do, and I think some of the REITs also do this, is that we add back depreciation because depreciation it's just an accounting treatment, no? It's really a non-cash expense. So we add it back. So it becomes an adjusted funds from operations, which means that your pot becomes bigger. So when you dividend out, it actually is over 90%, sometimes coming up to about 106%. It's not like we're making a bono. It's just like adding back an accounting line item and then just distributing the revenues for the investors.
Are there any factors, Ms. Joan, that could increase the dividend payout to these investors? Because you've been very generous when it comes to rewarding to the shareholders, right? So, what are the factors kaya that could bump up the?
On a same asset portfolio level, the variable income can contribute. That's something that we cannot really predict, right? Because it's depends on how much the contract prices are renewed or whether the plant has more sunny days than not, right? But I think the most evident increase in dividend income would be asset acquisition. So that instantaneously increases your lease income in a big way, right? So I think the investors of CREIT can look forward to that. We're currently planning it. I know a lot of you have been asking, how come we're not injecting assets, we're not buying assets, we're not adding to the portfolio? It's forthcoming. I promise you. We're just studying internally the best way to do this so that it maximizes shareholder value, which is what the end goal is, right?
Actually, my next question is related, Miss Joan. What methods would you be using kaya to acquire these assets in the future? Will it be through bonds or will it be through property for share swaps?
Nothing definitive yet. Each would have their own processes. So I think we're still studying, and in due time we will communicate this to our investors. Always.
Would debt financing be attractive kaya given that interest rates are getting lower and lower right now? So it means that it's cheaper to borrow money from the bank.
That's one of the things that we're considering. The BSP has been quite transparent with their direction to cut down rates further. So we're definitely looking at the most cost effective and shareholder rewarding way to acquire asset. I think those are the two key metrics that we always look into.
How do you plan to balance out growth while at the same time not being in debt by a lot and at the same time rewarding shareholders as well?
Very good question. Actually, the REIT law is quite strict about indebtedness for the REITs. No? So typically, a REIT can borrow up to 35%. If you are rated as investment grade, so like for instance, CREIT has been rated by Phil Ratings as PRS AA plus, meaning we are investment grade, we can borrow up to 70% of the value of the deposited property. So say if you look at our website, we just released our first half numbers. Our deposited property is about 20 billion right now, and we take out our current borrowings, right? It will give you a net borrowing of about 14 billion or so. So you take 70% of that. So our debt headroom or the allowable amount that we can borrow would be up to 9 billion. So say if I come out with a bond tomorrow and I borrow 9 billion, so that you can see the magnitude of what that can buy me. In 2023, the 4.5 billion bond that we issued acquired 5 million square meters. So in theory, 9 billion money can buy me 10 million square meters of land, which obviously will double my leasable space, right? So from 7 million, I'll add 10 million square meters. That is rental revenue impacting for the REIT. So
So from what I'm understanding, Ms. Joan, I think our investors out there should be on the lookout as well as as the guidance from BSP, right? How fast they cut rates and how will they cut rates.
yeah, so I think there's going to be that evaluation whether it's better to borrow or better to do an asset for share swap or do a follow-on offering. I think in the end, what's important to us would be the most cost-effective, how, again, the shareholders are deriving additional value from whatever increase in the asset portfolio.
Okay, Ms. Joan, my next question is how does the Philippines' current renewable environment right now push open more opportunities for CREIT?
I think the government's direction to encourage more development of renewable energy, given that they want to increase the supply take up coming from renewable energy platform. I think that in itself provides huge opportunity for CREIT to look at possible assets. No, we always get asked this question a lot. Would we ever consider acquiring properties from other renewable energy developers? And our answer is we're always open. But I think it will still boil down to the fact that one, of course, the cost of the acquisition has to create value, right? If you're lugi or you have to borrow money and then you have to make a bono, then why would you have to do it, right? So if the assets are reasonably priced, the assets are built properly to say enter into a long-term contract, then it would make sense,
It
right?
has to make sense
It
economically.
has to make sense economically. And of course, at the end of the day, the REIT kasi, a large part of it is owned by public, no? So unlike other listed companies wherein you only are required 20% public float, the REIT minimum is 33%. So we're more responsible to more minority shareholders, right? So I think the aspiration to have a very strict investment criteria, for example, for us, for CREIT, we can only acquire assets that are into renewable energy. So anything, for example, if it's land that's going to house a coal plant, cannot, right? So there are investment criteria that we go through as part of our governance process. And if it satisfies those, whether it's internally built or externally available, then we just go through that discipline.
Are there tax incentives, Miss Joan, that CREIT could exhaust from the government?
The REIT in itself, or the REITs in itself, I think they're allowed a tax-free exchange of the asset. I'm subject to securing the proper opinion and clearances, no. But apart from that, I think all the REITs benefit from a lower dividend tax.
What about for like the renewable space? Because sometimes the government, or most of the time, pala, the government puts out incentives out.
That's correct. Because in line with the government's goal to increase the supply coming from renewable energy, the government has given various incentives, whether it's fiscal or non-fiscal. So what are these incentives? For example, renewable energy company is allowed a tax income holiday for 7 years. So that allows you to kind of recover your investment.
What is the tax
Tax
holiday
holiday?
income?
No income tax for 7 years. And then at the end, you're given a preferential rate of 10%, right? Versus the normal corporate tax of anywhere from 25-30%, right? So you're also zero rated for VAT, meaning you don't incur that 12% additional cost. You also have some tax incentives in terms of importing your PV panels and all that. No? So a lot of incentives in terms of also being able to sell your generated output because they know that you're intermittent. The government has mandated that you are of a must dispatch, meaning you are ahead. If you produce something, automatically you can throw it to the grid, right? Which means the government doesn't want your power to be stranded, right, in your plant, meaning the government will make way that you are able to dispatch into the grid and power up houses. So those are the things that encourage companies like CREC to build and build faster, I guess.
Okay, Ms. Joan, let's move forward to shareholder value and partnerships. Since SM Investments became a major shareholder in 2024, have you unlocked any synergies that could benefit CREIT's growth?
Yeah, I think the entry of SM Investment Corporation in March 2024 was a testament or parang a seal of approval of our business model. So they see that there's going to be a visible pathway of developed properties that can be acquired into the REIT. And of course, any acquisition is money. You need to have shareholders like SM to have that deep pockets as well, right? So I think while there are not yet specific synergies right now, they're seeing what we're seeing. And this is what also you investors should be seeing, that there is indeed so much growth potential for CREIT because as the sponsor, CREC keeps on building its 1 gigawatt each year, then that's 1 gigawatt of potential asset acquisition for the REIT. Pero trivia, SM is not a stranger to the group. In fact, when Megawide IPO'd in 2011, SM was one of the anchor investors. And Megawide's growth was essentially in parallel with condominium units sold by SMDC because we were building a lot of the condos for them sometime in 2007 all the way up to 2011. 2012. So the relationship is there. We're quite honored that they believe in Boss Ed's vision and his entrepreneurial spirit, no, in pursuing whether it's Megawide as an infrastructure company or Citicore as a power company.
Ms. Joan, just a quick question. Why should investors out there consider CREIT to be a part of their portfolio today?
For those who are familiar with REITs, no, we're quite unique in terms of our product or portfolio offering. Investing in CREIT gives you an opportunity to invest in a green asset. If you're a believer that we have to do our own little way of supporting renewable energy companies for the next generations to come. I think CREIT can be that vehicle for you. We don't keep investors in the dark. We're quite visible in terms of our plans. And I think the investors that have been with us since the IPO in February 2022 have been richly rewarded. I hope you're still holding us, even if the price has now gone up about 45% from IPO, but you continue to receive dividends quarter after quarter after quarter. So kapit lang.
Ms. Joan, on a personal note, you've successfully led in an industry dominated by men in both construction and energy. So what has been your biggest learning or proudest achievement so far?
Yes, it's a male dominated industry, both for infrastructure as well as power. I think I'm just fortunate to have a very progressive chairman. Si Boss Ed is a believer of equality. I mean, he doesn't look down on you just because you're a female, or it could be that maybe he thinks I'm just one of the boys. I don't know, but I think that's one of the key things that I'm grateful for is that I have been given an opportunity to list not just one, but two companies. And for an IR practitioner, I've been doing this for over 20 years. I've never met anybody who's actually listed two companies. So a lot of it is having that ability to be able to provide a product or have investors believe in what you're selling, right? At the end of the day, they have to believe that what you are doing is something that they believe in, that they will support, and that they will invest in. So I think to me, that's where I find joy in what I'm doing. I mean, at the end of the day, I'm here because of investors, right?
Lastly, Ms. Joan, what excites you the most about CREIT's future? Like, for example, 5 years down the line, we look forward into the future. What do you hope will the company or you for yourself would have accomplished by then?
I think after 5 years, C-REIT would be definitely the largest REIT in the country. Some companies have followed suit. No, they've listed some renewable energy assets, and that's good because at the end of the day, investors should have options, should have choices. But knowing what REIT stands out more than others is the goal that I aspire to have. No, I think C-REIT is one of the top three REITs currently that investors have in their portfolio. But I think more than that, with our growth together with our sponsor CREC, then that gives us opportunity to slide into pole position, I guess.
Ms. Joan, thank you so much for joining us today. Any final words to our audience listening right now?
So thank you for giving me this opportunity, Dragonfly clients. It has been my pleasure to share with you our Citicore Energy REIT, what we do best, and we hope that you continue supporting us. Whether you're a dividend seeker, you can invest in CREIT. If you would like to have a growth stock, then maybe perhaps you would consider Citicore Renewable Energy Corporation or CREC for more, I guess, capital appreciation and growth story. But at the end of the day, I think for us, our commitment to being able to give you shareholder value is of primary importance to us. And we thank our friends from Dragonfly for allowing us to use their platform to share with you the Citicore journey and where it's headed.
Thank you so much for gracing us today, Ms. Joan. And so that's it for today's episode, guys, and see you on to the next one.